Hey guys, how's it going? Just thought I'd put together a reasonably quick outlook for the week ahead, as I just think price action is reasonably complex at the moment. If you go through kind of the time frames, you can make, or at least I feel like I can make a very good case for both the bullish and bearish scenarios across sort of the key time frames that we use. Which it happens from time to time when we're starting to get those higher time frame pullbacks. That's when we can start to get conflicting biases between the different time frames, as price action can start to get a little bit complex. So I had initially planned to kind of build this from the top down as always, but from completely blank charts across all the time frames. However, it will just make the video about 4 times as long, just to for me to kind of draw everything on and all that jazz. So what I've done is I've kept my analysis on for all the way down except the M15, and then from the M15 we'll kind of build that up from scratch. So what I'm actually going to do is look at the monthly chart. Now, I always say this, right? If the majority of us, especially if you trade like me, we're only really looking to catch anywhere from sort of 10 to 30 pips with the majority of our volume on a trade. So does it really matter too much what's going on the monthly, the weekly, maybe even the daily? Not necessarily. But for me personally, I find it helps a lot to know what's going on those larger and much longer term time frames and time horizons, to understand why potentially we're seeing certain price behavior on the lower time frames, right? So if maybe the 4 hour and the M15 is getting a bit choppy, getting a bit range bound, getting a bit indecisive, well, it's probably because we're coming off a major high time frame level, and it does take some days, weeks and months for those for price actions to turn around and potentially pull back. So if we look at the monthly time frame, right, we have this massive sweep zone that led to a pretty strong move that took out these highs here and a decent amount of supply. We've now come back down to the bottom of what is essentially just a large sideways range at this point. So it's no surprise, right, that we're starting to see that bounce, which we've been talking about for weeks now. And we could start to see a much more sustained move, potentially up into around sort of this level of supply. Or, the other cases, we're just going to stay range bound, and we could come all the way up to these levels over the next 6 to 12 months. Who knows? But really, the main point is that we're coming off a major level where we'd expect a decent amount of demand to step in. Whether this will hold, if it's a short-term bounce and goes, who knows? We can use the lower time frames for that. But it's more just about understanding we're at that sort of major high time frame level where we can expect bullish pressure coming in, which we can see here on the weekly charts as well. Right, looking kind of zooming in a bit more of the recent price action, which is obviously a little bit more relevant. We can see that bearish order flow. Sorry, I should say the order flow has been clearly bearish pretty much since the middle of 2021, where we just continued to sell off here on the weekly chart, right, where we can see the structure within here. And we've had a bit of a bounce off that extreme level, which did give us just get rid of the orange line, did give us a bullish change of character, as we had that fractal pullback there, right, and then we took the high, and then we've come in. So we do technically have some weekly demands that caused that bullish change of character coming off this extreme weekly and monthly demand here. So what does that mean? Well, it means overall we're still heavily bearish. I would expect this overall larger bearish order flow and swing structure to continue bearish until it doesn't. So that's ultimately what I'm expecting. I'm expecting this weak swing low to be taken out. But in the more sort of immediate term, i.e. the week ahead, we've had that bullish change of character. We've come back into sort of that extreme weekly demand that caused that bullish shock. So that gives us, some argument to the bullish case that for the week ahead, we could start to see a bit more of a sustained move, bullish move, potentially up into around this weekly flip zone here, right, which is a bit more within that significant piece of structure. So that is what we could see. But like I said, right, overall swing structure is stronger. This is a weak low. We have pulled back up to this level of supply. So it could just be a short-term bounce last week to now continue lower. Right, and this is why you have to be open to both scenarios the entire time. But that's as far really as much as I'm personally going to take from the weekly chart. I know I'm coming off of that extreme level. I know there's decent potential we could have a deeper pullback, potentially to this level, potentially higher. We have had a bullish weekly change of character. We've come back into the demand that caused that change of character. So now there's a decent argument that we could be ready to have that deeper complex pullback. Excuse me. Or the other argument is, right, we've already had that pullback to this level of supply, and now potentially we're just having a short-term bounce to continue lower and take out that weak low, right? So that's both the bullish and bearish case from the weekly chart. Now, daily chart, we can start to get a bit more in depth with our analysis as we can start to be a bit more accurate. Now, for me personally, I've mapped this as my last daily swing high, considering that as the last real significant daily pullback, and I'm just considering that as one daily move. Now, some of you may have that as a daily swing pullback, and that is absolutely fine. It's absolutely valid, right? And you may now have the daily as switching bullish. Kind of one of the main reasons why I didn't classify that as a daily pullback is simply because that's where my 4-hour structure was. So for me, I'm happy to just count that as one daily leg. And then obviously using multi-time frame analysis, i.e. also looking at the 4-hour chart, I can use that as the 4-hour chart being bullish at that point. But let's just think about one time frame for now, right? We don't need to necessarily overcomplicate it. So the way I'm viewing the daily, like I said, is this is my current daily swing high. This is my current daily swing low. We came into that sort of, extreme level of monthly, weekly and daily demand, and we had a pretty nice, strong, aggressive movement away. But for me, like I said, the swing structure is still bearish. So we've had that pullback up into this level of supply. Obviously it's just a wick, so it's not the most significant, but it is nested within this daily buy to sell range. So for me, that is a decent level of daily supply. And where is it? It's within the daily premium, okay, which we can see denoted by this red line here, right, the EQ. So again, what does that mean? It means we're bearish. We've had a pullback to daily premium supply. And now we could be ready, right? There's a good argument to say that we're now ready to take out what? Take out the weak swing low. Why is it a weak swing low? Well, because it failed to do its job. It failed to break the high. So remember, go back to basics. If you ever get confused, always know where your swing high is and your swing low. We want to be trading ideally from strong structure, i.e. we want to be trading, from this strong high and targeting the weak swing low. So we've had that daily break of structure. We've now had that pullback to daily premium supply, and it's looking like we could now go and target that weak swing low, right? That would be our most simple analysis. However, we can also see here that we had that bullish internal break of structure, right? As we had that movement, that small internal pullback and a movement down, and then the larger internal structure then switched bullish. So then as price was then selling off after mitigating premium daily supply, this is where you can start to get conflicting biases, even on one time frame. Because this low here is a weak swing low, right? Because it's failed to take out the weak swing high. So we can look for sales to try and take out that weak swing low. However, from an internal structure perspective, from a daily internal structure perspective, this would be a strong daily internal low simply because that caused the IBOS. Okay, so this is where you have weak swing low, but a strong internal low. So that's just the way the market is going to be sometimes. Sometimes you have those conflicting biases. But remember the hierarchy, right? Of what is the most important. Well, swing structure is the most important. Then we have internal structure, right? And then we have fractal. So if we have a strong swing low, but we have if we have a weak swing low, which is this low here, but we have a strong internal low, it's the swing structure that takes precedence. So ultimately, we'd expect this weak swing low to go, right? That's kind of, that's as clear as I can make it, really. That's the most important. Obviously, you could then have small internal within there as well, and that would be the order that it goes. So if you ever have conflicting biases, just remember swings are most important, then internal, then small internal, then fractal, etc., etc. Okay? So that's pretty much it in terms of the daily chart. We are bearish. We've had a pullback to premium supply. We then started to sell off quite aggressively, so there was a good case that we could then go down to take this weak swing low. But we're not surprised that price at least hasn't taken it out on first attempt, because this was a strong internal low because it led to the internal break of structure, right? So then as price pulls back in, then you could expect potentially a daily internal higher low from this level of demand to then potentially take out this weak daily internal high to facilitate that deeper daily swing pullback, potentially up into this level here or this level here. Right, and that's why I'm not surprised. Yes, we have pulled back to premium daily supply. Yes, it could be ready to continue lower, but we also have a strong daily internal low that price has come into. So now from an internal structure perspective, you could target this weak internal high this week, and we could expect this movement up into this level. Let me get rid of some of these drawings to make it clear. All right, so internal higher high. We've pulled back into that strong internal low. Potentially, we're now forming that internal higher low to now target the internal high to form an internal higher high, where then if we come into this level, I'll be more than happy to look for shorts to do what? To target the weak swing low. But at the same time, I'd be very aware that this would then be the new strong daily internal higher low, right? So if I'm shorting from here, I could target this weak low, but then I'll be taking heavy profits around this level in case the internal structure then stays bearish, right? And then we continue up, so on and so forth, up into this level here, which is our strong swing high. So again, I'd be happy to look for shorts to then target that weak swing low, but that would only really be confirmed that we're going to take out this low once we get the break of the internal structure. Because then what's happened is now the internal structure has switched bearish and it's aligned itself with the overall bearish swing structure. So only once that then happens, that then we can hold our short volume with a lot more confidence that we're going to go down and take out that swing low because the internal structures have aligned. So for me at the moment, The larger daily internal structure is not aligned with the daily. For me, the internal structure is bullish. This is a strong internal low. So there is that expectation that we could now this week come up and take out this week high and we could continue higher. But then I'd look for shorts from within here, like I said, to target the week swing low. But whilst being aware that the daily internal structure could stay bullish, right? Then again, I would look for shorts from within here, but being aware that the daily internal structure could stay bullish. So I'd look to take some profits, partial profits, but then if that breaks, now everything's aligned, and now we would expect the daily internal structure and order flow to stay bearish until we take out the week swing low. All right, so that's pretty much from a daily perspective how I'm viewing it for the week ahead. That internally this high is weak, so you could look for longs to target that high, but this is why it's a bit more complex. It's because overall, remember, swing structure is more important, and swing structure is bearish, and we've already pulled back to a premium daily supply level. So now there's every case that we could be ready to go and take out that low. And that's why, in the live markets, it can be a bit more confusing than theory, right? But we use that framework to at least help us. So again, before I even go down to the 4 hour or the M15, I really want to try and make this clear as possible. Swing structure, we pull back, expecting it to go lower, but from an internal structure perspective, we've had that internal high. We've come in from here. So it makes plenty of sense to look for longs to at least target this week high and then potentially higher. So how am I going to approach that? Well, ideally, I want to be getting in long nearer the bottom as possible. And then as we come into this level, right, although this is a weak internal high and internally we would expect it to break, remember, swing structure is more important. And because we've had that pullback, what can often happen is you can just get messy price action. It ranges a bit, comes into this level, even though it's a weak internal high, and we could sell off from here. We've just built some nice equal lows. We've built that liquidity to then target. So this is what I was saying at the start, is you can have conflicting biases and it can be a bit confusing. But as long as you outline areas, like well-priced areas, that makes sense, i.e. shorting from here, longing from down here, and then potentially staying out of the middle, then it doesn't matter too much really what your forecast is or what you think is going to happen, right? Because we can look for shorts from within here. That's what I'll be doing, trying to target that low, and potentially look for some longs within here, trying to see if we can get the break of that internal high. But obviously I would take a lot of profits from within here because I have no idea whether that high is going to go or not. Okay, so hopefully I haven't confused you too much, but that's why it's very key that you understand your frameworks first on one time frame of how swing structure relates to internal structure, weak and strong highs and lows, etc., before trying to then piece all of the puzzles together with multiple time frames. So I'll say it one more time. I know some of you are probably bored of this, but swing structure is overall bearish. We've had a pullback to premium supply. So from a swing structure perspective, we would be expecting this week's swing low to go. But from an internal structure perspective, we've had that internal high. We've pulled back into this extreme level. We've started to react. So from an internal structure perspective, we would expect this week high to go. But I would not be surprised at all because swing structure is more stronger, it's more important. If we were to kind of just creep into this level, remember, it might not necessarily hit this refined level, right? It could just come into this range here, and then potentially we could also, start to see a bit of a sell-off and then just take out those lows. That's why I'm open to both longs and shorts. Ideally, I want to be longing from as low as possible, like ideally down here. And then for shorts, I'd be looking from, ideally from within here. Okay, now if we do take out that weak high, like I was saying, we push up higher. So that means the internal structure has continued bullish. As we come in here, I'm happy to look for shorts. That's against the internal trend. But obviously, as it comes into these strong internal lows, again, you can look to take profits and you can look for from longs within here to then continue to target those weak highs, so on and so forth. Again, look for shorts from the strong swing high. But it's only once the internal structure then switch bearish, everything's aligned, and then we can look to take out that weak low. Okay, so hopefully that is now clear with how I'm viewing that. So this will be the kind of the key area to look for shorts, but ideally this is where I really want to be shorting from more so than here, because this is a weak high that we've already pulled back, so far failed to take out the low. So I'd like to see that get run, then look for the shorts from within here. That would be the most ideal, but I'm still happy to look for shorts from here. So that's the daily chart. Let's take a look at the 4 hour chart. So in terms of swing structure, some of you may have this slightly differently mapped. I think the majority of you would have had that as a bullish break, swing pullback, swing high. Definitely switched bearish then we failed to take out the high, so we formed a lower low, and then we pushed down. For me, I classify this as a swing pullback. We then took the low, and then we took the high. So for me, the 4 hour chart is bullish after that bullish break there, and we're currently trading between that swing high and that swing low there. So from a 4 hour chart perspective, let's just keep it simple. Let's not get too confusing. We've had a high. We can look for that higher low to come, and we can look to target this weak high here to push up higher. But I'm very aware, like I was saying on the daily chart, to look for sells potentially from these levels, especially if you kind of just zoom out a little bit and look at the larger price action, right? Big push down, pull back up to supply, strong push down. This could just be a little complex pullback, right? For it to temporarily switch bullish before then we get that bearish move. All right, and then we can look for that continued momentum to the downside there. But yeah, let's just keep it simple. 4 hour chart for me is bullish. This is a weak swing high that we tried to take out. We did have a sweep of liquidity. This is a good example of where, even though we can start to hypothesize this is a weak low because it failed to take out the high, and it only caused a wick break, you can still get tradable moves from these levels here to look for a quick reaction or potentially target that weak high. So from a 4 hour chart perspective, let's just think of one time frame on its own because it's probably the easiest way to do it, and then we can piece it together at the end. I personally view it as bullish. This would be my strong low. This would be my weak high. We've failed to take it out, which isn't a great sign. So I probably would have thought this might go, right? We're building a lot of liquidity. So what we might see is price kind of come into this level here. This is not a strong for our supply zone because it has not broken any structure at all. So I'm not massively keen on looking for sells from here. But what I'd like to see potentially on Monday or Tuesday is price come down, sweep all this liquidity, come into this extreme 4 hour strong zone here that led to a break of structure. And then we can look for longs from within here to target those weak highs. Right, because then we're getting in longs at good value from down here, near that low, to then target that weak daily internal high. Remember, we go back to the daily chart. All right, we've had that internal higher high, that internal pullback, and now we're looking to potentially try and target that weak high. So ideally, I want to be buying as low as possible because we understand that could be the swing pullback to continue lower. All right, so we go back to the 4 hour chart. We can see we're bullish. Ideally, the most ideal place to look for longs is from within here, but it might not pull back there, right? It might just continue this bullish order flow, and we may just continue to take out this high at the start of the week. So if we were to do that, right, let's say we just creep up and then we take out this high and we get a close above, then we would have a new swing range, right? That would be our new swing range. You could then look for the shorts from this level here, and then look to pay that pullback, but just be aware it would be against the 4 hour trend, and then we could potentially continue higher up into this level, which is a more ideal level for shorts because it's within that daily zone. And then again, that's where we can look for that move to the downside. But yeah, it's not the cleanest of price action. Remember, we're kind of in the middle of this range at the moment. So ideally longs, shorts from up there and longs from down here. At the start of the week, you don't need to rush into any trades and buy within here, right? Because it's literally kind of, if we have this larger sideways daily internal range, we're bang in the middle of that at the moment. And then you've got this smaller 4 hour internal range within the swing range. So you've got this small range within here, right? We're bang within the middle of that, and we're in the premium of the actual swing range. So it's not the clearest of price action, right? We're just moving sideways, and this is where you don't need to be jumping into trades and force your hand because you'll kick yourself, right? Imagine if we came down here on Tuesday or Wednesday, and then we get the nice clean setups, right? We know these are the high probability and obvious places to be trading, i.e. if we come up here, right? Rather than trying to force it within here. So yeah, 4 hours bullish. Ideally we can look for longs from within here, but if we push up a little bit higher, then any sells from supply would just be that counter trend pullback, right, to continue higher until the trend actually changes. So 4 hour chart's not that complicated, to be fair. The only thing that if you want to make it complicated, right, like I was saying at the start, is we have had a very strong push down, so you could almost view that as one strong leg down. You might not have viewed that as a swing breaker structure, so one push down, and this is just a pullback into supply, which may add some confidence to why you want to look for some more aggressive shorts within here to then try and catch that next leg to the downside. But to be honest with you, again, I have to refrain myself here from overcomplicating it and to try and keep it as simple as possible. So that brings us to the 15-minute chart, which I have left blank. So if you're ever not sure where, if you have a blank chart, you know how far back to go to make sure you have your swing highs in place. Whenever I see like a big impulse like that price is still contained within, I know that I at least need to look, left from this point here to try and figure out where the swing high and the swing low is, right? Because we can clearly see, right, that was one big push up, and then since that high's formed, we failed, to close above it, and we clearly haven't broken below the low. So we know that all of this is definitely internal price action in the M15. It's not swing structure. So that means we need to go back a little bit more. So let's kind of go to a bit more of an easier place, and then we'll go from there. So had this movement now, we had this pullback here, right? So that can be a swing breaker structure. And then let's see, did we break and close below this low? No. Okay, so that's not swing. So we actually came up and take out this swing high here. All right. Push down, pull back, push down. We then failed to take out the low, and then we came up and switched bullish. And then this strong low was protected. We can see that because that became the swing low. Nice sweep zone there as well. So that would have been a beautiful level to look for some longs. Just bad timing there just before market close. And then we continued bullish. No idea what happened there. This is why drawing it from blank chart just takes a lot longer. But anyway, so then we switch bullish, and then we pull. Hang on a second. Yeah, that would be a decent sized pullback. So we switch another bullish breaker structure there, and then this will be the lowest point. So that's our bearish breaker structure. And then so this is where some of you may have different structure, right? Because some of you may classify that as a swing pullback. So let's just do it a slightly more aggressive way. So we pull back and then we continue lower. So this line here, this is the 4-hour swing low, right? So this has nothing to do with the M15 at this point. So I'll just map it on for you quickly so you can see it. So we push down, push up, push down, push up, push down, push up. All right, then we had the pullback, then we had the movement up, then we switch bearish, swing pullback, and then we push down. So that would be quite a sizable swing pullback, then down, and then up, okay? So this is a slightly more aggressive way of mapping it. I forgot to put in the bearish breaker structure, but this is definitely one way which I'm doing at the moment. And you see how that's basically just one big push up. Yeah, you get a bit of a pause here, but you can see, right? Big sweep of liquidity, big push up. These are the kind of, you want to see those kind of more visual swings if you're going to use discretion and not always be super strict with pip counts, which is the way I kind of prefer to do it, right? You want to visually see price pull back, and then we come into the extreme of that low and then pushed away. So that would be your next breaker structure there on the M15. And then that brings us to where we are, because now we have this one straight big push up. So where's my current swing high? If we use our nice pretty circles, this would be, we want the M15 swing. That's my current swing high. And where's the lowest point that led to the last breaker structure? After that high was formed, it would be this low here, right? Just trying to see if anyone would have been able to map that any differently. So swing push down, that would have been the same. I'm just trying to look if you're a bit more conservative. So maybe you would have viewed that as one move, then it would have been bearish, and then it would have been bullish anyway. So then that would be your swing high and your swing low. Other way you may have done it is you may have still had that, and then you may have just viewed that as one movement down, right? But then, again, you still be bullish. So pretty much everyone should be bullish on the M15. The only difference would be whether that's your swing low or that's your swing low. Okay, so you can see whether you have pip rules or whether you use a bit of discretion, it's not the be all and end all. It's just as long as, generally you have that consistent approach, and you'll be fine, especially if you use multi-time frame analysis. But this is the current swing range I have within, so let's be really pedantic and put on all of these labels just so we can really measure it out. So if we are bullish, this is obviously going to be weak swing structure because it hasn't broken the swing low yet. So that can be our weak swing high, and this will be our strong swing low. So these two blue lines denote the current M15 swing range we are within. So that's M15 swing strong. Cool. So we know ideally we want to be buying in terms of just the M15 on its own, as the M15 is bullish. That is then, actually, let's just talk about one time frame at a time, and then we'll tie up at the end with kind of all of the time frames together. So M15 is bullish. Let's put on our premium discount from the swing high to the swing low. Let's make sure that's only in the minutes. Cool. So we pull back into the discount. We have mitigated M15 demand in the discount. Nice flip zone there led to a breaker structure. Right, you can see it reacted from this level here. I'm not going to draw, I'm going to try and keep the charts as clear as possible. We then tried to take out the swing high, but failed to do so. So we start to form a bit of a demand chain here. Just going to draw some of this on, build this story a little bit, and then we'll see where we are with internal structure. Okay, so pull back to M15 discount. So there's a good argument that could be the swing pullback over, and now we're trying to take out the weak swing high, but we failed to do so. So we can see now currently what internal range are we in. Well, we've had this one big push up here, so we can see that price is trading between this internal high and this internal low. So this kind of gives us a bit more of a smaller internal range to work with, which can really help when you are within a much larger swing range. So we're not just sitting on our hands all of the time necessarily waiting for price to come down, because we have this nice extreme range down here. So this would probably be the most ideal place if price was to sell off at the start of the week for us to look for longs. All right, I'm just going to take the whole range here, drag this across, and then we can be a bit more refined within there where we've got the extreme. pivot zone within there. Okay, so that would be obviously nice, but we ideally want to be buying right at the extreme near the swing low. We know the price doesn't have to, especially when it's pulled back to a demand zone in the discount, right, of that swing leg. So yeah, hopefully that makes sense so far. This is the current M15 swing range we're within. Obviously price has been quite complex and quite range bound, so it's not super clean, but we can try and make sense of a bit more of it if we look at the current range we're within, right? That's obviously one big impulsive push, and price is contained within this internal high and this internal low at the moment. So let's keep being pedantic and let's label this out as a weak internal high that we can look to target, and then we have this strong internal low as well. Strong, cool. So we pull back to the extreme of that leg and we started to move away. So from a swing and larger internal structure perspective, we want to target this weak high, and obviously got this weak internal high as well. We pull back into this protected or strong internal low, and that's looking like we're going to try and target and take that out. However, we do have to also be aware that's a big sweep of the external range liquidity in that swing high. It's been quite an impulsive sell-off, and since then this has been quite corrective. So there's every possibility, even though this would be against the internal structure, against the bullish internal structure, and against the bullish swing structure, you know, I wouldn't be necessarily surprised if potentially we sold off and came in lower before then looking for that move. So let's just be aware of that. We obviously do have this supply zone here as well, which did sweep this liquidity behind these highs here. Okay, so we came into this level here, and then we had, if we look at the smaller internal structure, this bullish IBOS here. So what I'm looking at is just the internal with internal. So we had the pullback, down movement, then we broke up, then we pulled back, and then we didn't close until here. Right, so that's the current leg we're within, right? So I draw that high on here. Don't worry, this is getting a little bit confusing, but this is because, you know, this is what it's like when price action pretty range bound sideways. It does get complex. We know that. So yeah, hopefully you can see that's the orange line, right? Down movement, up movement, down movement. Then we broke above, then we pulled back. Didn't quite close above until there. So this would be our current smaller internal low here, and that would be our current smaller internal high. So essentially playing within this small internal range, within this larger internal range, within this swing range. So that's essentially the M15. We've kind of got three ranges there, right? Swing one being the most important and the biggest one. Then we've got this larger internal range here, and then within that we've got this smaller internal range within there. So let's get rid of all of this orange drawings. And you know, this is just, you know, one technique we're trying to use to help us with price action and when it gets complex. But remember, that doesn't mean that you have to trade it. Always remember, like, you know, the concepts we've been using the whole time, and don't force stuff within here. You don't have to trade this, right? Wait for those high probability and clearer moves, i.e. trading from nearer the strong swing lows at the extremes, right? Yeah, so cool. So in terms of kind of coming into Monday, we know the M15 is bullish, the large internal structure is bullish, and so is the smaller internal structure. I'll draw on some circles that might help. Small, so we had, that was that high there, right, and that low. And then we got that high, and then once that broke there, where's the lowest point? So that would be the current sort of smaller internal low we've got, and that high here. So let's think about, what does this framework actually mean? You know, what's the rules that we use? Well, we would expect the large internal structure to stay bullish, right, until it takes out the weak swing high, which we haven't quite done yet, but that's essentially what we're looking to happen, right? We think we pull back to form that large internal high low to take the weak internal high out. We then have the small internal structure has aligned itself bullish with the larger internal structure. So price came in, we then switched bullish, we pull back, and we switch bullish. So we'd expect what? We'd expect this smaller bullish internal structure to stay bullish until what? Until it takes out that internal high. So that's really what I'd be looking for coming into the start of the week. Obviously a lot can change with the market open and Asia, but I would expect that smaller internal structure to stay bullish until it takes out the weak internal high. So we've got this level here. Let's just draw these on a bit. This is kind of all mitigated. Do we have anything else? Kind of got this wick, really. That's about it. So again, doesn't mean you have to trade this. It's just we're just aware of the possibilities, right, of what we expect to happen within the framework that we're using. So then really they're kind of the only two unmitigated demand levels I can see within here. So targeting this weak internal high, we're within this smaller internal range. So potentially there could be longs from here or from here, because we would expect this internal structure to stay bullish until that high goes, right? That would be the expectation. So what would change the expectation? Well, let's say we push up higher and we come into this level here, potentially we mitigate some remaining supply or something within these extreme levels here, and then it switched bearish. Now we'd expect what? We'd expect the small internal structure to stay bearish until it takes out the start of that bullish run, right? Until it takes out the start of that internal leg. And that's what we'd expect bearish order flow to go down to there, and probably at that point, probably take out this low. And then that may mean where we could short down or look for price to, we would expect price to come down into the strong low there. Okay? Again, pretty horrible, messy price action, not necessarily something I want to trade, but that's the framework in which we're using to try and make sense of it all. So we know we have this M15 bullish range. We're basically moving sideways in the premium, so it's not ideal whatsoever. We have this larger internal range that we're working within, right? This being our strong internal low, that being our weak internal high. We have pulled back really to that extreme demand. The small internal structure has then aligned itself bullish in line with a larger internal structure, aligned with a larger swing structure. So now we'd expect this smaller internal structure to stay bullish, whether it's from here or from here, right? Until it takes out that weak internal high. However, what could happen is, let's say this pulls back during Asia and then it switches bearish, then potentially we'd expect that to stay bearish until it takes out the low, right? But obviously price can get a little bit complex. And that would be it. That would be my expectation. Imagine this was just pre-London. That's what I'd be looking for. Potentially longs from here or from here. Doesn't mean I'm in love with it. It's not the most well priced. It's in the premium. It's overall moving sideways. I don't like that we swept the swing high. We've had a very strong push down and we're moving very, very correctively up into that level. So there's, I wouldn't be surprised necessarily if we started to sell off. And that's why if you're confused or you're not sure or it doesn't look great, you do not have to trade it, right? And wait for, the more obvious setup. So that would be the M15. Obviously, if we do start to break out higher and we get that closure, then of course, if you get that, depending on your rules, but i.e., let's say you want to look for an M15 chock from a level of M15 or 4-hour supply, then you could look to play the swing pullback, right, down into the new swing low and continue up higher. Let's dig into here, see if there's any refined M15 levels within there. Okay, so we've got this level here. But we've also got the inside bar just behind it. And then you've also got the extreme, even though the distal's mitigated. So really, I'm not going to bother drawing all three of these zones because they're all going to join up. And essentially, it's just going to give me that grey zone anyway. But yeah, that's nice to know there's kind of a lot of M15 zones all together within there. So yeah, so that's M15. It's bullish on the swing, larger internal and smaller internal. So for now, I just expect that to continue until those highs are taken out. But I wouldn't be surprised necessarily, potentially become lower, especially after the sweep of that high. So that would be M15 on its own. Let's kind of start from the top again. So weekly chart, and again, I'm going to do my best here to try and keep it simple, even for my own benefit, because it's very easy to kind of overcomplicate it and look at every single scenario. For me, the weekly is heavily, heavily bearish. Order flow is clearly bearish, and I'm expecting that to continue until it doesn't. However, we are coming off that extreme monthly sort of sweep zone. We have had a bullish change of character, and we've come back into sort of that extreme demand that caused a bullish chock. So I wouldn't be surprised if we start to see a complex pullback, potentially into this weekly level here, and potentially higher. But we can't ignore that we have had a down movement or pullback into weekly supply, and we could be ready just to continue that movement there. Daily chart, you can see the clear daily swing range that we're within, being this high here and this low here. We have had a pullback to daily supply in the premium, and we've sold off quite aggressively. So very similar to what I just said in the weekly chart, there's every possibility we're just having a small bounce to continue that sell-off. We're just building some more liquidity, building some more equal lows to then target the continuation of that move. That would be kind of the overall swing structure, or potentially, right, we're just having a little bit of a range bound up into this level here, kind of a continuation of the supply chain, right, and look for shorts to again take out those equal lows and continue that movement. That's the kind of clearer and stronger bearish case. But if we start to build again more of a bullish scenario, we had a strong internal breaker structure here, right, a decent move. So the daily internal structure is now bullish. We've come down into that daily strong internal low, come into this demand level. So now there's a good argument that we can target this weak internal high, and look to continue to play that move. And again, if we come into shorts, I'll be happy to look for shorts to take out the swing low, but bearing in mind that if the internal structure is still bullish, that could continue bullish until we get into here. Again, look for shorts from within there, but it's only once the internal structure then switches bearish that then everything is aligned, and then we can target and hold our volume with a lot more confidence down towards that swing low. Okay, so That's how I'm viewing the daily chart. Happy to look for longs within here with the potential that that's a weak internal high, but also happy to look for shorts within here because it's pro the swing trend and we could be ready to continue to sell off. Which brings us nicely into the 4-hour chart. I personally have it as bullish. You could have it as that just being one push down and that being a complex pullback, which is fine. But that's why I always have it aware in the back of my mind that even though for me this is the bullish swing trend, I wouldn't be surprised, right, if we kind of came in potentially even higher and then we switch bearish and then I know we're aligned and then we can look for that daily movement there, right? So from a 4-hour chart perspective, that's my strong low, that's my weak high. Ideally, it'd be nice if we kind of came in, sold off a bit, and then we could look for some longs from within here. Or you could wait for the break of the swing high and then look to play the pullback from within here. Right, again, look to play the pullbacks and continue that movement up to target that weak daily internal high. So yeah, there is a level of 4-hour supply here, but it's not a strong level of supply because it hasn't broken any structure or flipped anything, right? So don't really, not in love with selling from here, but there is some logic behind it. If it sets up nicely and meets your rules, but ideally, like I was saying, I'd prefer to be longing from here or shorting from these clearer supply levels. And then that brings us down to the M15, which is bullish on our swing internal and smaller internal. So just kind of expect that to continue until it doesn't. Is it the best price? No. Have we had accelerated liquidity sweep and a strong sell-off? Yes. So again, not in love with it all. But hopefully that breakdown kind of makes sense of how I'm viewing price action, which it is reasonably complex overall, right? So if you're ever confused, just delete all of your mappings and drawings in the middle. Just know where your swing highs and where your swing lows. Know where the well priced and extreme zones are. Set your alerts and just be patient and wait for price to come to them. And don't get chopped up in the middle trying to force things. Just because your framework might tell you what you expect to happen doesn't necessarily mean it's something in which you should be risking your capital on. So I'll leave that there. Hopefully that's going to help you to make sense of it all at the moment, or at least with the way that I'm doing things. Hopefully you guys have a good week, and I'll see you next one. Cheers, guys.